Thank you, Mr. President. I rise today to urge my colleagues in the Senate to pass the Export-Import Bank legislation that's now before us. This debate this morning is about jobs, it's about manufacturing jobs, and it's about U.S. manufacturing jobs. And that is because this bank is one of the most powerful tools that we have for manufacturing jobs in America. It's a debate about whether this chamber believes that access to financing is a key tool for U.S. companies to compete on an international basis when they are trying to get U.S. manufactured products sold overseas. In fiscal year 2011 alone, the bank supported nearly 290,000 export-created jobs in America. But those are the jobs that are going to be threatened if this chamber does not act. That is because this authority expires on May 31st. That's right, just 16 days from now. And between now and then, the House is in session for only 5 days. So we can't afford to take this to the brink one more time with amendments passed by the Senate today that are really just amendments that are gutting the Ex-Im Bank. These 5 amendments that will be considered basically would lapse the bank's authority, and this would put into the debate more uncertainty about our economy. We need to act now to renew the bank's charter, and businesses can't wait. They need the planning and certainty to hire more people, and failing to act will stifle U.S. economic opportunity. That's why nearly 24 governors, both Democrats and Republicans alike, have urged for the bank's extension, and so has the Chamber of Commerce, the National Association of Manufacturers, and Small Business Association. Mr. President, I'd like to enter into the record a chart that is the jobs supported by Ex-Im financing by each state, so that members, if they'd like to, could come down and look at both the revenue that was generated and the jobs that were supported.
Without opposition and without objection.
The default rate on the bank is consistently less than 2%, lower than most commercial lending. So I'm sure we'll hear a lot about that debate today. But since 2005, the Export-Import Bank has returned $3.7 billion to the U.S. Treasury, above and beyond the cost of operation. So yes, my colleagues, this is actually something that is making money for the federal government. So not only is it helping U.S. manufacturers sell their products overseas, financing in a way that I think is equivalent to what the Small Business Administration does, help provide a certain level of financing that makes deals come through. I think that's why you find that banks are supportive of this. The money is back into the U.S. taxpayer's pocket, and it supports us winning in a global situation by getting our products sold. So it has been incredibly helpful to our economy, zero cost to the taxpayers, and, in fact, the nonpartisan Congressional Budget Office concluded that a 4-year reauthorization of the bank would reduce the deficit by up to $900 million over 5 years. So the bank works for businesses, it works for U.S. taxpayers. So there is a compromise that is before us, and I know that it may not be the compromise. I see my colleague from South Carolina on the floor. It may not be the compromise he or I would have written to this legislation, but nonetheless, it's a compromise and it's time to act. The reason I say that is because so many states also are counting on the Export-Import Bank, just like in Washington State. Pennsylvania, for example, has over $1.4 billion in exports and 9,800 jobs related to the Export-Import Bank. Massachusetts, another state, $566 million. This is from the annual report of the Ex-Im Bank in 2011. So $566 million of economic revenue generated in Massachusetts and over 4,000 jobs. Why? Because we helped Massachusetts exporters get access to capital so that they could sell their products overseas and win in the international marketplace. Texas, another example, $4.9 billion in exports, 35,274 jobs. These are jobs that America needs. This is a global economy in which America needs to be able to compete. So getting access to capital so that products can be sold is a critically important issue. Florida, another great example of the support of the Ex-Im Bank, $1.1 billion in exports and over 643 jobs. So another big winner. The state of North Carolina, $456 million in exports and 3,309 jobs. And Ohio, just another example of manufacturers and businesses, $398 million in exports and 2,888 jobs. So while there are many people who would like to say that this program should be discontinued, if they are not in favor, I guess I'm sure some of my colleagues aren't, because there are many programs that they would like to get rid of, I would say this is a program that's good for the U.S. taxpayers. The Ex-Im Bank generates $3.7 billion for U.S. taxpayers since 2005. So what is this debate about? I would say that the underlying amendments that my colleagues are offering are trying to gut the Ex-Im Bank. They simply don't like it, want to get rid of it, or say that it is not a viable tool. I guess because 1 in 4 jobs in Washington state are based on trade, I know how critically important it is, whether you're an agricultural product, or you're selling airplanes, whether you're selling music stands, as one company we saw, or you're selling grain silos, you need to be able to compete in an international marketplace, and you need to be able to get sales of those products. So this has been a very viable and important tool. Some of my colleagues have previously raised concerns about the bank's transparency and oversight, and these concerns have been heard and addressed in this legislation. I'd like to talk about the 5 ways that this new compromise bill addresses those concerns. There's more oversight. Under the amended bill, we would have a quarterly report on its default rate, and the first of these reports would be due of September of this year. So the bank has historically maintained a low default rate of less than 2%, but under this provision, if the default rate reaches 2% or higher, the bank will have to develop a plan to fix the problem and report to Congress within 1 month. And if the default rate stays above 2% for more than 6 months, they will be subject to review of an independent auditor. So these, I think, are very viable and important additions to the legislation. And not only would the auditor be there to help fix what was going on, but would have the oversight for anything that was involved with the bank that they needed to report on. There's less risk. Second change to the underlying bill. The Government Accountability Office must study and report back to the bank safeguards that prevent it from taking loans that are too risky. And again, since the bank has had a historically low default rate, we're happy to add this language, but it just is another layer of protection on something that is performing and performing well, but happy to add that to the legislation. More public input. The bank will have to open public comment period for transactions greater than $100 million, and will have to notify Congress about these transactions, so more transparency on what some consider the bigger financial loans that the bank is involved in. And fourth, more accountability. There's an annual report that the bank has to justify in the need of every transaction. Every transaction. That way, the public will know if the bank has acted because a private lender would not have, or if it acted in response to foreign export credit agencies. And then fifth, the Treasury must engage nations in discussions about the need for export financing worldwide. Now, I know some of my colleagues on the other side of the aisle would hope that the president would just end all export financing and lead that discussion at the World Trade Organizations. I would ask my colleagues, what's the difference between this and the Small Business Administration that provides an opportunity, a bridging of capital between small businesses and the opportunities to join with private financing to make deals happen? I believe, because as I said, I live in a state where we know how beneficial export markets are to our products, whether they're cherries, whether they're apples, whether they're airplanes, whether they're a variety of new technologies. These products are winning the day in an international marketplace, and they're creating jobs. So my colleagues on the other side of the aisle who would like to end this program, or to say that it ought to be ended on an international basis, we're happy to hear what the world community wants to debate and discuss in this basis. But I will say, in the moment of crisis of our financial institutions, when one of the supposedly most risk-averse institutions can't figure out why it lost $2 billion, and you want small businesses across America to pay the price for the fact that they can't get financing of their products sold in an international marketplace? We got to wake up here and understand that this is about helping small businesses and helping us win the day for products that are created in the United States and sold abroad. So, Mr. President, the compromise legislation that's offered here today is the best path forward. These amendments are an attempt to gut the underlying bill, and those who would like to stop the authorization of the bank and have it curtailed, because as I said, we only have about 5 legislative days given the House's schedule to get this done. They would like to tell all those businesses I just mentioned in those states, Ohio, Pennsylvania, Florida, and others, that we don't know anymore whether this program exists, and let's actually stop the funding and lose jobs. So I know that there are people like in my state, Larry Stone from SCAFCO or Bill Perdue from Sunoco. They gave me a message that the American people want us to focus on creating jobs and supporting businesses. They want a program like this to continue, and they want the jobs that it creates for their communities. I thank the President, and I yield the floor.